Leo Puri, MD and CEO of UTI AMC, UTI Asset Management Company. Mr. Puri, many thanks for joining us. My first question to you, what's your assessment of what you made of Budget 2017? Has that been broadly in line with your expectations?
Yeah, I think it's in line more or less with what we expected and what we've come to expect now, because this is the third budget we've seen of the Modi administration. And in a way, they've all been fairly workmanlike, and they've always been about Bharat as well as India, and that's reflected here. And typically, the more spectacular announcements tend to have happened before the budget, and the budget is used to amplify them. And I think that's pretty much the way I would describe this budget as well.
Let's get into some specifics, and let's start with the budget deficit, about 3.2% for fiscal 18. Do you believe that they've done that balancing act well, managing fiscal prudence yet ensuring that they're spending in the right places?
Yeah, I think some of the fiscal hawks might be a little disappointed and would have been hoping for something around 3%. But in the context of what we've seen in terms of both global events and demonetization, clearly maintaining some balance towards growth was the right thing to do. And the path, as the government has emphasized, remains steady. I think looking back at the trend line over 3 years, we are on a fiscal consolidation path. We've not deviated from it. This is not a blowout. You're on the same glide path. You've chosen a point that may not perhaps appeal to the hawks. But personally, I actually think it's a good point. And I remain convinced of their conviction that we are ultimately a country that's still committed to fiscal probity.
Let's talk about the markets. I mean, how do you think the financial markets are going to react to this? Forget today's reaction. Is there enough in store for greater capital flows? We've seen a lot of flows coming into the mutual funds. Is that going to encourage more money coming in?
So I think the immediate reaction has been positive, as you said, and there are sort of broadly two triggers for this. One is that for the foreign investors, there was the tactical trigger around clarification on the indirect tax transfer, resulting from the confusion from the CBDT circular last December. And I think that has provided a bit of encouragement to FPIs who are otherwise feeling a bit uncertain. And alongside that, some of the atmospherics around a commitment to FDI and removal of FIPB are all positives. For most other participants, the stimulus in effect provided through affordable housing and the multiplier that people are anticipating there into the entire supply chain was definitely the big positive of the day that helped. And if you look at the counters that were moving today, they were all in a sense indirectly sort of beneficiaries of that major central announcement. So will that last? Well, I think corporate earnings have been better than feared, but a little worse than perhaps was originally hoped for at the beginning of the year. Now that we have seen a reasonable quarter, the expectation is going to be a sharp uptick in earnings over the next 2 quarters. So the sustainability of the rally will depend on that playing out. The budget, if anything, is likely to be helpful towards that process. Apart from the somewhat encouraging boost to affordable housing, there are elements of stimulus elsewhere. There's a form of stimulus in terms of the direct tax, however small it may be. There's a form of stimulus again in terms of trying to introduce market-linked mechanisms in agriculture, which I think is very important. It's a small detail in the budget, but allowing, for example, perishables to be taken out of APMC or creating new contract farming laws, which will actually enable contract farming, which has been stuck for years to take off, since the years Pepsi and Bharti and others have tried and found it very difficult. But it could be a major boost again to rural incomes if this were to happen, for example. So embedded in this, there are small pockets of potential stimulus that people have picked up. Most importantly, there was no bad news today, because that can often overshadow a set of good intentions.
The first person who said that. Many people have exactly said the same thing, that no negative news is actually good news. I want to pick up the point about capital flows as well. You've seen a cut in income tax.
Yeah.
Do you see that fueling money coming into, domestic money coming into the stock markets? And in that sense, is that a kicker?
The reduction in tax will primarily, I think, be a boost to consumption. It's not very significant at that point. I don't think it'll impact households' view on their savings. But if you look at what preceded the budget, the demonetization has brought savings out into the open, if you like, out of the shadow economy and into the banking system. Now, with further encouragement for digitization, etc., we expect that to stay, and continuing restrictions on the use of cash, the 3 lakh limit, and on the flip side, the encouragement to BEAM and point of sale sort of tariff reductions and so on. So I actually do think you're going to see a flow into financial assets in general, more driven by demonetization and the follow-through effect of the budget. The budget on its own is not the big driver of that. There's one other small push in the budget towards financialization, which is the reduction in the capital gains holding period for real estate from 3 years to 2 years, which is positive in many ways. But alongside that is the permission now to invest those proceeds in a broader range of financial instruments. I have to look at the detail to understand how broad that range of financial instruments is. But in effect, what we're saying is if you own a property now, you can liquidate it more quickly. So it's a nudge to you to quickly start liquidating real estate inventory you're holding. You don't have to wait 3 years. You can do it in 2 years. And you get the encouragement that you can now invest it not just in the narrow set of bonds that you could earlier. You might have a more interesting set of instruments with perhaps higher yield opportunities, which will further incentivize you. So that's where the financialization, if you like, you're seeing another way of encouraging a shift from real assets to financial assets. And some of that is going to clearly flow into markets, both debt markets and equity markets. Not all of this will come into equity because a lot of people are still seeking the safety of relatively secure yield. But net, all of this is helping fuel India's capital, appetite and growth. So we would be very happy with that.
You were talking about corporate earnings. The key question that we're asking as well is, do you think this budget revives investments, particularly private sector, corporate, to start spending?
Nothing. There's no direct impact that I could see in the budget that was so I could headline and say, here's a neon sign that says, come on, let's start investing to the private sector. If anything, the larger corporates are probably a bit disappointed they didn't get the 25% tax rate. But mind you, given that the government anyway was only going to introduce that on a revenue neutral basis, which is removal of exemptions, and substitute that with a 25% rate, I'm not sure that would have been as big an impact as they hoped for. But psychologically, it's disappointed them. As you know, also capacity utilization is not very high. It's somewhere between 65 and 70% at the moment. So the impetus to start capex is in any case not high until consumption picks up. And so what you have in the government, in the budget, is some signs that the government will start to lead public investments, which is sort of consistent with what we'd expect. And the revival of capex, let alone animal spirits in the private sector, is probably a little way down the line. My sense is earning will be driven through essentially higher capacity utilization. And the investment-led part of the cycle is still some distance away. We have to believe we're going to get there because you can't drive economic growth on a consumption cycle alone. And investment rates have dropped alarmingly, I think, from 38% where they were to 25, 27% now. So we are on a trend that would be worrying if it didn't start to stabilize and reverse. But I think the confidence will build if you see the quality of public expenditure actually start to shape opportunities for people around infrastructure, which is obviously the hope. Some of this is also in the digital area. Now the definition of infrastructure is being expanded here. It of course includes affordable housing, but it includes digital infrastructure now as well, which is a new opportunity and which may be able to avoid some of the pitfalls of trying to build roads and bridges, and that may attract a new class of entrepreneurs into the quote infrastructure sector as these definitions sort of get expanded. And I think that will certainly see some investments as well. But that's not the big driver in this budget, to my view. I think the revival of private sector capex
Is still a while away.
will need to wait a little bit longer.
Divestment. We've seen a number of about 72,000 crores. Ambitious, you think? Because divestment targets have not been met in the last, 4-5 budgets.
You have to hold faith in the fact that this government is committed to broad liberalization and reform, and that a key pillar of that reform is stepping back from the state. That the commanding heights is not where the state should be, and in a fundamental sense, therefore, there has to be a commitment to roll back. And the decision or the announcement that there will be broad-based listing of CPSEs, I view as very positive. In
Through
that,
the
again,
ETF route.
well, it's not clear through what route. It may be ETF. But the point is, you're going to now list and essentially monetize your holdings in public sector enterprises. Obviously, they're not saying they're privatizing them, but they are monetizing, and you start to see the effects of good governance even at one level, simply through listing. And that's a form of divestment and coming straight into the coppers. I do think there could have been more definition around how this will happen.
Sure.
I continue to think there has to be a commitment to strategic sales, which gets talked about from time to time, and Niti Aayog has raised it, and these ideas are being floated, which gives me hope that we are not too far away from actually constructing a well thought through program for strategic disinvestment. But at the moment, there's clear signs that yes, we are on a path where the government is going to start stepping back. The decision to create a single energy company is also very intriguing in that regard. I mean, I think in the spirit of reforms of public sector enterprises, because it's going to take upstream, downstream, and given how vulnerable we are in the energy domain as a large net importer, this might be the beginning of a more positive approach to managing our energy needs, the efficiency with which we operate in the sector, and
Sure.
so on. And I may be being optimistic there, but I'm looking forward to more details around that, because if this is an attempt to better manage public assets, then that's a good sign too. You need to first manage the assets better and then sell them, ideally.
Sure.
But if you can't manage them better, sell them anyway and let someone else manage them.
Sure.
And maybe a little bit of both is going to happen at this point. So I do anticipate a step up in disinvestment through these routes.
Okay. I have one final question, Mr. Puri. What's the one or two things that you thought would happen in this budget that didn't happen?
Perhaps there could have been a bit more in the budget about the banking system and what we intend to do to continue reforms in the banking sector. Maybe that will happen elsewhere, and of course budget isn't the only place where you can do this. But there, other than the 10,000 crores which was referenced, which is very negligible, frankly, the desire to carry forward what was initiated a year and a half ago with the Bank Board Bureau and the thrust towards eventually creating a bank holding company, the performance-based recapitalization, the consolidation, the enforced cleanup through joint action between the RBI and the government, and therefore accelerated resolution of net NPAs. And the Economic Survey raised hopes through talking of an asset rehabilitation, the so-called para entities. That was missing in the FM's speech today. He didn't seem to find room for it. So personally, to me, I will look forward to that. That's a gap, in my view, that I would have liked to have seen filled.
Mr. Puri, many thanks indeed for joining us. Thank you so much indeed. And if you have been, thank you so much for watching.